All right, so in econ, we've got like two ways of measuring trade between countries. So the first and kind of simplest is balance of trade. And balance of trade is just, it's basically what we've been calling net exports all along. It's just exports minus imports. So it's just kind of a real simple measure of trade. It only looks at goods and services. It doesn't look at like other transactions that are part of international trade. It's probably like the most common measure of international trade, and oftentimes, like especially if you hear like politicians talking about trade, they usually focus on balance of trade. So if you have like a positive balance, we call that a surplus. So a trade surplus would mean that you export more than you import, and a negative balance would equal a trade deficit. Now, when it comes to like talking about a trade surplus versus trade deficit, economists don't really think of a trade deficit. They don't really think of it as a problem. So like the United States runs a big trade deficit with China. Most economists, at least most American economists, they do not view that as like a problem or an issue or like something to be like worried about. There are some exceptions. So like, clearly President Trump made a big deal about like the trade balance and the imbalance of trade between China and the United States. And he had some economists on his staff who were like, really concerned with that trade deficit and what that means. But by and large, most economists are not worried about a trade deficit. All that means is that other people are producing stuff cheaper and you're bringing that stuff into your country so that your people are able to kind of have a higher standard of living by buying things at a lower price. So it's like, another way to kind of think of that is like, yeah, we have a trade deficit with China, but like, if you're a poor American, like Walmart and Amazon to a degree, they've made things so much cheaper in the United States that when you look at like inflation over the last 20 years, things like healthcare have gone up a lot, things like education have gone up a lot, but things like TVs and lots of other like consumable things that kind of families buy, those prices have gone down over time, and a big part of that is because of that trade deficit, that we're bringing in a lot of cheap stuff from other countries more than we actually export out. But to a degree, that's helped lower and middle class Americans maintain a higher standard of living, even though our incomes haven't kept up with like the overall growth of the economy. So trade deficit sounds like a bad thing, but most economists in the United States don't really see it as a big problem. And in fact, most economists would say what really matters is more the balance of payments than the balance of trade. That the balance of trade is a pretty simple way of looking at things. The balance of payments is a more complete view of trade between countries. So let's look at what goes on here. The balance of payments is broken up into two accounts: the current account and the capital and financial account. Now, the current account is made up of three different things. Number one, the current account is going to be made up of our trade in goods, trading goods and services it's going to be like the first thing that goes on your current account. That is the balance of trade. That is exports minus imports. It's the same thing that we have over here. It's just one part of this larger. So your balance of payments includes balance of trade, but a lot more stuff as well. The second thing that goes in the current account are going to be transfer payments. And those transfer payments are usually going to be like, it's usually a one-way transfer. So there's usually nothing that you're like, it's not like you're earning it and it's not like you're paying for something. A transfer payment is usually just like, think of it, the best way to think of it is like a one-way gift. So like if there's a natural disaster in like Ecuador and the Americans have like concerts to raise money for Ecuador, and like you can text some number and then you send $10 to like help the Ecuadorians, and like, you know, basically the United States sends, you know, maybe millions or billions of dollars to help the Ecuadorians. That's going to be a transfer payment because it's just a one-way sending of money with nothing coming in return. And then the third thing that goes on the current account is going to be profits from assets that are held in other countries. So this is like if Mr. Tweet was to buy a business in like, I don't know, like let's say I decided to buy like a restaurant in Brazil, and then that restaurant, you know, in Brazil, they make money, then every time, like every month when that restaurant sends some money back to Mr. Tweet and is like, hey, here you go, boss, here's the money that we made this month, right? Every time that they would send those profits back to the United States, that would be, you know, a profit from an asset owned or held in another country. So that's the current account. These are all, you know, different kind of examples of that current account. The capital and financial account are going to be assets that are permanently held in other countries. So that's like the assets that this one is talking about. Those assets go over here. So this is going to include when you buy or sell a business in another country. This includes when you buy or sell like real estate or like a house in another country. And then the other one where the word financial plays into this, if you buy or sell a bond in another country, that goes on the capital financial account as well. Now, when we talk about the current account and the capital account, we should also, you know, review the terms credit and debit. Credit means money coming in. Debit means money going out. So what we basically have going on here, this is like kind of related to the bank balance sheets that we did. We have really more accounting that's going on here. And so when you're an accountant, you're keeping track of the things that are coming in and the things that are going out. The ones coming in are credits, the ones going out are debits, and you keep track of it on on a balance sheet. Now, for when we talk about the balance of payments, you always have to look at it from the, you have to first figure out what point of view are you looking at, because if we have something that's going from one country to another, the money is going to be going out of one country, it's going into another country. It's a credit for one side, it's a debit for the other. So every time you have a credit, you have a debit that matches it, right? So the question, like if I ask whether, if there's some sort of like international transaction, and if I ask whether it's a credit or a debit, you have to figure out, first of all, whose perspective are we looking at? So that when we talk about, if it is something like, a person in England buys, a car made in Germany, is that a credit or debit? Well, we'd have to know, are we talking about from England's point of view or from Germany's point of view? Because from England's point of view, the car is coming in, the money is going out. That's a debit for England. But that's also a credit from Germany, because in Germany, the car is leaving, the money is coming in. So you follow the money, whether it's going in or out, know if it's credit or debit, but you also have to pay attention to the point of view. Is it, the point of view of, which of the two parties is it? Now, if something is on the current account for one, it's going to be on the current account for the other. So in this example, where the car is being, the German car is being sold in England, it goes on the current account for England because it's a trade in goods or services. Then it has to go on the current account for Germany as well, because it's still a trade of goods and services. It's just the credit or debit is different, but if it goes on one account for one, it has to go on the same account for the other one. So this is our balance of payments. The nice thing about the balance of payments is that it tells us a little bit more of a complete story about what's going on than balance of trade. So let me give you some examples of some various exchanges, and then we'll talk about whether it's a credit or a debit again, and whether it's current or capital account. So we can go through some examples real quick. So first example I'll give you guys. This weekend, I went online and I bought a knockoff Padres jersey from China. True story. So when I bought that knockoff Padres jersey from China, which account does it go on, and is it a credit or a debit? What do you think? Yeah, so because it's like a good that's being, because it's like an import that's coming in from China, then it goes on the current account. And it's going to be a debit for the United States because money is leaving the United States and going into China. It's going to be a credit for China because those are the ones that are getting the money. The stuff is leaving. All right, so good. All right, let me give you guys another example. A couple weeks ago, I was golfing with Mr. Millsap, and we got put in a group with two other people that we didn't know. And one of these people in this group, he was a professor at UCSD. And so I was talking to him a little bit about UCSD. And one of the things that he kind of told me was that at UCSD, currently about 1/3 of their students are from China and India, and their parents pay the full rate for them to go to UCSD. And that basically those kids from India and China are subsidizing the education for the Californian or American kids that are going there. So so let's say we have a parent in India who's paying for his daughter to go to college in the United States. So parent in India paying for his daughter to go to college in the United States. Which account does that go on? And is it a credit or debit for the United States? Good. So it goes on the current account, and it's a credit for the United States because the money is coming in. So then it would be on the current account and a debit for India. All right, let me give you guys another example. My wife was a stay-at-home mom for a number of years when my kids were little, especially when my daughters were homeschooled. And then when we've always let our kids choose like what they wanted to do for education. So like when my daughters decided that they didn't want to be homeschooled anymore and they wanted to go to a regular public school, we said sure. And so we made that change like 3 years ago. And my wife was who had been kind of a stay-at-home mom for years, she decided to go back to work as a teacher. And we've been used to living off my salary for a long time. So now it's like suddenly seems like we have a lot more, well, we do have a lot more income, but it feels like we have a ton of money, right? Because we were used to living off of one income instead of two. And so we were talking this week about some of the stuff we were going to use our money to do, some stuff around our house. My wife was like, it seems like we're going to have some money left after we do all of this house stuff. Maybe if we save up for a year, we could buy another house. And so we started looking at maybe buying a condo in Hawaii. that we could kind of Airbnb most of the time. But then if we wanted to go to Hawaii, we'd have a place to stay. So we started looking into buying condos in Hawaii, but that very quickly got us looking into maybe buying a house in another country like Belize. So that if we wanted to go on vacation, we could go to like Belize and we'd have a house to stay there, but that we could also like, use it as an Airbnb there. So if we decided to buy a second house in Belize to kind of rent out most of the time, would that be on the current or capital account for the United States? And would it be a credit or a debit? Exactly. So it's going to be on the capital account because we're buying, right, an asset that house stays in Belize. It doesn't leave. It doesn't, there's no, it's not a good because it's not crossing borders. It's not an export. So it would be it would go on the capital account, and it would be a debit for the United States because the money is going out. So one of the things I wanted to point out is that a lot of times we might think of like credits are good, debits are bad, because credit means money is coming in, debit means money is going out. But in this case, on the capital account, a debit is not necessarily a bad thing. A debit means that you are acquiring assets in another country. Hopefully those assets, they go up in value over time. And so that would be kind of a good thing. Now, I had a follow-up comment here, and that's exactly where I was going to go next is, let's say that, Mr. Tweet has this second house in Belize, and he uses it mostly as an Airbnb, and his Belize bank account starts getting kind of fat. And so that Mr. Tweet then decides to kind of take that money from the rent from that house, and he decides to move some of it to his bank account in America, right? Is that go on the current account or the capital account? And is it a credit or debit? Yeah, so it's a credit for the United States because the money is coming in, and it definitely goes on the current account. This is an example of the profits from assets held in other countries, that I'm making money off of this asset in this other country, and then I'm bringing the profits back. That goes here on the current account. Just as if I was like owning, like I said, I think the other example I had was like a restaurant in Brazil, that if I decided to like take money from that restaurant out of the money in Brazil profits, that goes on the current account. All right, let's look at a few more. Let's see, next example. When I was a child, my parents were getting ready to do some work on their house, but they needed to put some retaining walls up in the backyard to stop the like hillside from eroding. And so these retaining walls had to have these really big footings dug into like, basically into this like super hard like sandstone. And so my dad and I worked on digging these footings. But to help with this process, on the weekends, my dad would hire this guy who worked for a friend of his on a farm. This guy was from Mexico, and he would come work at our house on the weekends with my dad and I, and we would pay him cash. And then he would send most of the money back to his family in Mexico for them to kind of save up and live off of. So question is this a credit or debit for the United States? Does it go on the current or capital account? What do you think? All right, so this is going to be a debit because the money's going out of the United States, and this does go on the current account. This is an example of a transfer payment when you have money being sent one direction with nothing coming in exchange for that. All right, another example. This weekend I went and I got my second COVID vaccination. And while I was there, I bumped into Mr. Palmer, who was getting his second COVID vaccination as well at the same place. And I had chatted with him a few weeks ago about hiking and places to hike around San Diego, and because it's a common interest that we both have. And so I was telling him about how I had done this hike last weekend up on Mount Laguna with my family. We'd done this 12-mile hike that he had recommended, and it was amazing. And so he was like, well, if you're really that into hiking, like, I guess I passed his test or whatever, because he was like, if you're really that into hiking, he's like, there was this hike that I did with my wife a few years ago, where he basically hiked from the south of France through Spain. And it's like a 300-mile like trail. And he did, like he said, about 120 miles or 150 miles of the 300-mile trail. And he said it was like, the most amazing experience of his life. He said you like hike like 12 hours a day, and then you stop in like every little town that you stop in after the end of the day, they have like, little restaurants where you can get good food and it's pretty cheap. They have like hostels or like little rooms for rent, so that you can like rent rooms in people's houses or at these little, hostels. So you don't really have to like carry a sleeping bag or a backpack, because you just stay at these like houses along the way. And you just have to bring with you your clothes, and then you have to like buy the food and the shelter. So the question is, like, if somebody goes to another country on a hiking trip and they're paying for food and shelter, does this go on the current account or the capital account? And is it a credit or a debit for the United States? All right, so this is a debit because the United States is paying, Americans are paying for this, so it's a debit, and it goes on the current account because it is, again, a trade of goods and services. Even though it's technically not an export, because the goods aren't really like, the service isn't leaving France or isn't leaving Spain, we would keep track of it on the trades of goods and services up under the current account. Let's see. One last example. Let's say that rather than going on a vacation to Europe, or rather than buying a vacation home in Belize, let's say that Mr. Tweet decides to buy some German bonds because they have a higher real interest rate. So if Mr. Tweet's buying some German bonds, is that a credit or debit on the current or capital account? So it's going to be a debit because the money is going to Germany, and it's going to be on the capital account because bonds are assets that are held in the country where the bond is issued. So in this case, that it would be, again, on the capital account in Germany. Now, let's say that bond pays me interest every 6 months. And so a year later, I've now been paid German interest twice, and I decide that I want that money in America to spend. So I send the money from my German brokerage account to my American checking account. Is that a credit or a debit on the current or the capital account? Yeah, so it's going to be a credit to the United States because the money's coming in, and then it goes on the current account as well. And if I get tired of having that bond and I decide to sell that bond, does that go on the current or the capital account? Is it a credit or debit? Yeah, it goes on the capital account because it's the sale of a permanent asset, sale of a bond, and it's a credit for the United States because I'm bringing my money back over. So, so that really covers kind of the whole balance of trade, balance of payments. Now, one of the things when you understand kind of this balance of payments, it allows you to better understand what happens when we run a trade deficit, and why it might or might not be a big problem. So as we kind of started off, when I talked about balance of trade, I talked about how the United States runs a big trade deficit with China, right? Well, when we look at the balance of payments, we have a big deficit on this side over here, but China has to do something with the extra American dollars that they get, because what's happened is we're sending more dollars to them than they send to us, we're sending less stuff to them than they send to us. And so what ends up happening is we end up with more stuff. They end up with more US dollars, right? So what do they do with those US dollars? What do you think? Yeah, they're going to use them over here on the capital side. So what ends up happening is over the last 40 years, as we've kind of run a big trade deficit with China, sometimes they use that money to buy like businesses in the United States. Sometimes they use that money to buy real estate. So there's a lot of Chinese people buying real estate in the United States. And, that's part of maybe what's fueled the increase in housing prices over the last couple decades has been money coming in from China and other countries that have been buying up that real estate. So partially what might be making everybody's rents go up really fast in the United States is that we have this trade deficit with China. And so we are getting more like stuff, and we're getting our stuff cheaper, but we're paying for it in higher rents because that money's being funneled back into real estate. And then the biggest place where we've seen that money go is that they've been buying bonds. So the Chinese government has been, Chinese citizens, I guess, have been buying up American government bonds. Now, the question is why, right? As far as an economist goes, right? Like if I'm an economist and I'm looking at this, I'm just saying, all right, well, we're getting more of this trades and goods and services. And then we are selling this over here. That's why most economists would say that this is not a big, the trade deficit with China is not a big problem, is because they still have to spend those US dollars. And in general, what they're spending it on is buying American government debt so that we're able to kind of use that money, that government debt, we're able to take that money back and use it to provide goods and services to our to our citizens. And we only have to pay like 1% to 2% interest a year on that debt. So the United States government has been able to borrow that money back from China for the last 40 years pretty cheaply. So what does that mean for us, right? Well, this is kind of where, we're now at the point where you guys should understand macroeconomics enough that we can actually start talking about some of these macro global issues. So why is China buying up all of that government debt? It's a good question. And it's one where, American economists probably really can't say. It's one where we can only guess what China is doing and what they think. Now, for me, I think about kind of like China and how they've adopted the markets, the market economy over the last 40 years, but they've maintained their communist government. And so I have to think if I'm running a communist government, why, would I be okay basically selling the labor of my people to the United States at a really low rate? Why would I do that? Because all of the extra stuff that comes to the United States from China, more than the United States sending stuff to China, that means our standard of living has gone up because we're getting more stuff than we're sending away. So we have more stuff to share. So our standard of living has gone up over time because of all of the stuff we've brought in for China. That also means that to a degree, Chinese people's standard of living is lower than it could be because they send more stuff away than what they bring back. Does that make sense? So I have to ask myself, why would the communist Chinese government, why would they lower their people's standard of living to raise American standard of living? Does that seem like something that they would value or that would be, important to them? And I think the answer has to be that there's something else that they hope to gain. Now, one possibility is that what they hope to gain is simply economic stability. That by buying those bonds and sitting on that American debt and collecting their 1% to 2% interest a year on that American debt, that what they're doing is they're just kind of buying stability. That's, a one possible answer, but I suspect that's not it. China's been around, in some form or another for like 4,000 years. The United States has been around as a country for like 250 years. And even like as a people, like if we go back to the colonies, maybe 400 years, if that, you could say that we've been kind of like, a people. Chinese people tend to have a much longer view of history than Americans do. And I suspect that this buying up of American debt, I suspect that it has some larger purpose behind it. My guess is that ultimately China wants to be the most important country in the world. The United States has been the most important country in the world for the last, almost now, we're going on 75 years. Since like 1945, the United States has been the most important country in the world. And 75 years is a pretty long time, but it's, and we were talking about like empires, it's a good amount of time, but I suspect that China is feeling like it's time for the American empire to end, and for the Chinese empire to begin again. And so when we talk about like, empires and what it means in the world today, you can travel almost anywhere in the world as an American and as an English speaker, and almost anywhere in the world you go, you're going to find people who speak English. It's the language of business. And so even if you have people from two different countries, neither one of them who speak English, if they speak two different languages, they're probably doing business in English. So like if you have like, you could have, trade deals going on between like France and Mexico, and there's a good chance that the language of business there is going to be English. I suspect that China wants that language of business to be Mandarin, that they want that to be the global language, because with that comes a lot of like power and influence. I suspect that China is looking at the US dollar, and maybe China would like the world's reserve currency to be Chinese currency instead of American currency. For a long time now, basically since World War II, the US dollar has been the reserve currency for other countries in the world. So what makes their currency valuable in many other countries, they actually acquire US dollars and they sit on them, so that their currency has value because they have US dollars sitting in their bank accounts that they could use to kind of back up their currency. I think China would like to be the currency of international trade. Oil transactions all happen in US dollars. I think China would like to see that end maybe. So how do you go about doing that? How do you go about replacing the United States as the global economic leader? Well, one of the ways that you could do that, right? In fact, we came really close to seeing this happen. In 2008, during the financial crisis, you guys, if you haven't watched The Big Short yet, when you watch it, you guys will kind of get more background on this. But in 2008, during the financial crisis, Russia reached out to China and said to China, hey, are you guys interested in dumping all of your American debt with us? Because Russia holds a lot of American debt, so does China, right? Now, what would happen if China and Russia sold all of their American debt at once, right? Well, this is like where we use our economic skills, right? What happens if anybody in the world decides to sell a huge amount of any one thing? What would happen if Saudi Arabia suddenly said, we are going to sell all of our oil all at once? What happens to the market for oil? It would collapse. And by collapse, what we mean is the price would collapse, right? Or if like the De Beers company that has like 90% of the world's diamonds held in storage. If the De Beers company suddenly decided, you know what, we're going to sell, right, 50% of the world's diamonds, we're going to sell them all right now. What happens to the market for diamonds? It collapses, right? When you understand economics and supply and demand, you understand that if somebody sells a whole bunch of something, all of a sudden that the price collapses, right? Well, if the De Beers company decided to sell all of their diamonds all at once, what does that mean for jewelry stores? It means they can't, you can't sell a tennis bracelet if suddenly the price of diamonds has collapsed. That means, your tennis bracelet is now, you're going to sell it for a fraction of what you paid for it. Those businesses are probably going to have a really hard time selling their jewelry. Does that make sense? Right. So now let's apply this analogy to the US government, that if China and Russia start selling all of their government bonds all at once, right? What does that do to the market for American bonds? It causes it to collapse. It causes the price to fall, right? And so now, right, if I'm an investor and I want to buy a US bond, right? Why would I buy a new bond from the US government when I could go buy one from China for a fraction of the price? Same thing is like, why would I go buy diamonds at the jewelry store when the De Beers company is selling diamonds at a fraction of the price? Why would I go buy new jewelry? It's the same thing with bonds. That if bond prices have completely collapsed, why would I want a new bond from the US government? Right? The only way that I would be willing to get that new bond from the US government is if they gave me an interest rate that was really high, 8%, 10%. Maybe then I would be interested in it. So now what we see is interest rates for the US government skyrocket, right? Or the US government can't borrow money. Well, what happens to the US government if they can't borrow money? What happens to our economy? If they can't borrow money, they have to either really raise taxes or really cut spending, but it's probably both. And then you have to ask yourself, what would happen in the United States if this year our government came out and said, we're raising everybody's taxes by 10% or by 20%, and oh yeah, everybody in the military, we're cutting your pay by 20%. Everybody on Social Security, we're cutting your Social Security checks in half. Everybody on Medicare, sorry, we're not providing healthcare to old people anymore, right? Medicare's gone. Social Security is a fraction of what it was. The military is hardly going to get paid anymore. Oh yeah, schools, the money that the federal government used to send you, that's gone, right? What would happen to our economy? Aggregate demand would plummet. We would be in a massive recession, right? At the same time, we're in a massive recession, right? The government would be raising our taxes, ceasing to provide many services that they've always provided, things like Social Security, right? What would happen in this nation if they did that? Yeah, the economy collapses, and I suspect our political system collapses. I suspect that you wouldn't have thousands of people storming the Capitol, that you would have millions of people. Super pissed off. And again, because something way bigger than what they understand is causing this to all come back on us at once. So is that what China's doing? Is that why China for 40 years has sent us more stuff than we've sent them? Why they've continued to acquire American bonds and why they're sitting on them? I don't know. But it's definitely a possibility, and it's definitely going to be the major story of your lifetimes. That, if you're someone who's graduating high school today, over the next 40 years, this transition of power from the United States to China is going to be the most important thing that happens in your world. It's going to affect your lives. Just like how, from 1945 to 1985, for the Americans who lived during that time period as adults, everything was about the Cold War. Everything came back to that conflict between the United States and the Soviet Union. The next 40 years, I think it's going to all be about the United States and China. Now, it's not going to be, I don't think it's going to be, like a World War III, like a shooting war, but I think it is going to be very, very difficult for Americans to kind of accept a lower place in the world. What does it mean to not be the best country or the #1 country or the top country in the world? I think Americans are going to have a really hard time dealing with that. The British were able to figure it out. Although you can kind of see with Brexit that they still, have a hard time kind of being part of a larger global community. I think Americans are going to really struggle even more than the British. So, it is definitely, it is a little scary, isn't it? It's a little scary to think about, but if you understand macroeconomics, you don't have to go on to be an economist, or you might not use macroeconomics in your everyday life, but if you understand macroeconomics, at least you have a chance of understanding what's happening and what's going to happen, and maybe you can use that information to your advantage.